Welcome to this tutorial on trend reversal patterns using stock volume analysis. You can also use this with futures and commodities and other markets. So this is actually a follow-up to the previous week's video. That one is on volume trading strategy. I'll put a link down in the description for that one. But I'll do a quick review here real quick just to show the meta pattern that we demonstrated in that video, which is real easy. Basically, we get an up move, an impulse move up, and a retrace. And what we want to see is we draw these little rectangles on volume, where volume, in fact, we'll draw it all the way across. And we want to see, as the market moves up, a breakout of that rectangle outside of that range. And that indicates a strong move up. Now, on the retrace, that's just as important. In fact, a little bit more important even. On the retrace, we want to see that volume dip back down into that range. In other words, we don't want to see big volume on the retrace. Otherwise, then this uptrend may be at an end because there'll be strong selling. And then as the market moves back up, it makes another impulse move up. So we're looking at that trend. Then guess what? We get volume coming in. So it's strong. It's a strong move up. And actually it goes to that bar there. And then on the retrace, volume comes back in the zone. So again, we have strong buying, weak selling. Strong buying, weak selling. All right? And that's the basic meta pattern that we teach for trend continuations. And then it just gets stuck in this range. And guess where the market goes? Well, it goes nowhere. It just kind of gets range bound then, right? Okay, so that's the first meta pattern to understand. So now that's for trend continuations. Let's look at trend reversals. Now, the beautiful thing about this concept of trend reversal patterns using stock volume analysis is that it's very logical, so it's easy to remember. If you just remember the logic, you'll get it down. You don't have to do any rote memorization. So it's really just the opposite, and it all makes logical sense, right? If you get a lot of buying, a lot of volume in one direction, then you're going to get strength in that direction. So what we would look for in a trend reversal is exactly the opposite of what we looked for in a trend continuation. So again, a trend reversal will be more likely to occur after an extended trend. This one's actually been going on for a long time. It goes way beyond this here on the left-hand side of the chart. But I just want to focus on the end of it, because that's our lesson today. So let's see. Let's draw in our average zone here for volume. It's right in about there. Again, if you want, you can use a moving average there. I prefer to do it this way personally. Now, as the market goes up, do we really get any, here we do, yes, and it goes up from there. But after that point, where's the next time that volume gets above the top of the range? As it goes up? No, it's going up on weakness. See that? It's going up on weakness. In fact, I don't even want to draw that. Let me do it this way. So here, let's highlight that in yellow because we use yellow for keeping within the zone. So sure, this whole time, the market is still going up on price, but not on strength. It's going up on weakness. That is our first clue. That's our first indication that, this volume may now be coming to an end. Then, when it comes down, now if we were going to continue to buy this as a trend continuation pattern, we'd want to see weakness on the way down in terms of volume, but no, we get strength. We get big volume bars. So it's coming down on strength. Now that means there's not just profit taking and not just retailers shorting, but there are large institutions selling, big volume on the downside. That's actual shorting, not just covering positions, most likely. Anyway, either way, it is, not good for the bears, right? So I'm sorry, not good for the bulls, good for the bears. Getting ahead of myself here. I usually think faster than I can think, or think faster than I can talk. See, told you. So now, wait a minute, this could be a trend change. Because now the strength is to the downside as indicated by volume. And I actually wanted to do an arrow there. There we go. Okie dokie. So now we get an up move. Well, is that up move on strength or weakness? Oh, wait a minute. Now it's on weakness. It only goes up on basically 2 bars there. And holy smokes, it's going up on weakness. So again, then when it comes back down it comes down on what? Strength, strong volume, if you will. So you see, the dominant energy, if you think about it with that phrase, what is the dominant energy of the market? Is it moving up with strength, moving down with strength, or is there just no dominant direction at all? I mean, during this time here, frankly, there's really no dominant energy up or down, even though the price of the market is moving up. But there's no dominant energy in the market with regard to volume. And again, we can look at one more example. It goes up. When it goes up on what? Weakness. Volume is back down within the range. And when it comes back down, it comes down with strength. So that's it. So now, as soon as we get to this, now the first time this happens, this is your first clue, right? Right in here. That's your first clue. And then this is more like the confirmation. So it'd be hard to buy or hard to short this because this comes in at the end of the move. So then you'd look at maybe a retrace. And then you'd say, okay, well, if I could either be real aggressive and short up here based on this pattern. And again, I wouldn't do that unless it was an extended trend. But that's a pretty aggressive trade, I'd have to say. Pretty aggressive because you don't really have any confirmation of strength to the upside or downside. But for real aggressive traders, that's a potential option. The better one, I think we have more confirmation now. Now we've seen the dominant energy of the market shift to the downside. And so this retrace is really the first time that you have the best, most conservative trade entry for a trend reversal trade. So if you like this video, if you felt that this is helpful to you, then hey, help others by paying it forward. Click on that beautiful little share button below. People will benefit from it, and you'll feel good. Feels good to do good things for good people. Also, I love your comments. Go ahead and click the thumbs up icon and leave any comments you have. I read every single one of them. They mean a lot to me. And finally, I am giving away my rubber band trade strategy. That one is a complete trade strategy. It's not just a little tutorial like this. I actually, in that strategy, give you the entries, the exits, where I place my stops, everything, the whole rules for the trade, something you can start trading right away, but please trade it on a demo or simulator first, make it prove itself to you, and prove to yourself that you can trade it profitably. Absolutely free. Just click on the icon in the top right-hand corner of the video, and I'll get that over to you immediately.